Right, so I just wanted to quickly go over the dollar because it's actually looking pretty interesting structure-wise. Hopefully you'll be able to see the screen at this point, and we are going to break down a position that we took, two positions that we took based off of the dollar index. So right now we're on the hourly. Let's go to the daily time frame. Now the dollar has really started to show some weakness as of recently. You can see here that we had that big bullish push up. It started round about 14th of June 2021, and we managed to push up quite considerably, breaking these highs and then coming back down, small retracement, and then making new highs again. But this time that we've made new highs, we're actually struggling. We're really starting to struggle round about this area, 92.7000 or 92,700. This is now showing signs of maybe short term, at least, bearish price action. You can see we had that daily engulfing candle yesterday. Really strong signs that the sellers are taking back control. And now if we go down to the lower time frames to see exactly what's happening, if we go down to the 1 hour, we're able to see things a little bit clearer. Now, we are taking, as you can see here, we formed that inverted double top, we crashed down, we broke below these lows. Now we're coming back up to retest these highs and around this, what was a support zone is now broken, come back and retest as resistance, so something like that. Now we've had that bearish engulfing candle, and the next probable place for us to take trades based off the dollar index down to, we just took a nice simple copy and paste of this leg down, a small retracement back up, and then we've pasted the exact same size leg down from the top here where you see this engulfing bearish candle, really strong signs. We've took that, and you can see here minus 390 pips, and that will take us exactly down to where this wick had actually formed on the initial bullish move up on the 6th of July. So that is kind of what we were looking at for the dollar index. Will this come into fruition? There's every chance that it will not. But the probabilities are stacked in our favour for it to be short-term bearish, at least down to that level. And it's definitely another confluence that you could add on the positions that you're currently already in. So let's just go to a couple of positions that we've just entered. We entered USDJPY short, and we also entered Aussie USD long. We're waiting for a little bit more confirmation on Aussie USD. We managed to get that bullish engulfing candle. We had multiple confluences that we had talked about in the past. If we go to the daily, we'll be able to see a little bit better. You can see we are coming into a really big level. Now, just because we're coming into a big level doesn't mean to say that we can all of a sudden assume that we are going to have high impact action in the form of buyers stepping in the market and driving the price up higher, at least short term, and then maybe come back down and to retest that level. But we do have another couple of confluences. You see the way the price action is being formed going into this level, and it is matching up perfectly with the bottom of these touch points here. So it's really struggled to break below that. It's sitting right on that daily level. We did get that bullish engulfing candle breaking these small highs here, and now we do plan to take that trade back up to the top of where the pattern initially formed. Let's try and make that a round number. Let's say 0.58. We could go 0.58900, or we could go I would say 0.75800 would be more of I would say that would be a little bit more accurate. So 0.75800. So now there we go, and that gives us a 4.3. If we risk 2%, we could be banking 8% off of this trade. So that was one of the reasons we got in Aussie USD long, and we are also looking at USDJPY short. Not actually entered this, have we? Let's double check. Yep, we have actually entered this position. So let's break it down again from the daily time frame. You can see for a while here we had respected this channel. We sort of disrespected it a little bit, came back outside it, then came back inside, and that's where we've really started to see price action get squeezed. We've seen that bearish leg down, closing firmly outside the pattern, and now we're coming back into that pullback phase, and we do expect a second leg down to at least a support zone where you see this accumulated support. So for us, if we go down to the 1 hour, just so we can see exactly what's happening, a good place to be taking our profits is something like maybe where we had initially. So this could be a good place to take targets. It's not too far away. It's only 81 pips. We can make it a round number, 109 to 100. And then we have our stop loss, 110. I would just make that 200 also. So you're looking about 19, 20 pips. You're getting a 4 to 1. If you're risking 2%, you're getting an 8% gain. If this does come into fruition, if the dollar does weaken off like we are expecting it to, at least short term, I do actually think long term, we will actually be bearish again, but I don't think that's going to happen just as quick. I think this is going to be short-term bearish momentum. We might actually start to see some strong dollar power again, and then slowly but surely as the cases rise up, just like history repeats itself, I do imagine that it's going to cause some problems for the dollar, not to mention the American government. We're talking about tapering the dollar because it believes that the market got overexcited with the bullish momentum and it actually overextended beyond a reasonable rate, and now they are looking to sort of scale that back. So these are the two trades that we've taken based on the dollar index and how we would look to be trading things, and sort of how we would map out our take profits or stop losses, making sure that we've got plenty of room to breathe. We're also trying to get round numbers. We're also trying to stack confidences and make sure that our stop loss is behind not many things that I would use indicator wise. This is just a 50 EMA. So there's another confidence to tuck your stop loss just tightly behind that, especially if it is respected in the form of a tweezer top. And then we have other confidences like the dollar potentially weakening, and knowing the price range of where that's most likely going to move to just based off that leg. Does this work all the time? Absolutely not, but it's just a good way of stacking the probabilities in your favor to make sure that when you do make a trading decision, that you're not just making it off of the fact that price action has reacted really good off a level. You're taking a little bit more time to break down the trade, understand the weight of the confluences you're looking at. Is confluence X have more weight and more probability than confluence B? And then how many confluences can we stack in the one currency pair for it to be worth putting our money into it? So that was just a quick one. We just wanted to break down what we're doing with the dollar index, what we're going to be doing with the dollar pairs to finish off the week. It's been a good week, and I hope everybody else has had a good week. We'll be looking forward to the next one and see what that brings. So until Sunday,